and welcome to another episode of Circular Insights. My name is Lijin. I'm the host for this podcast, as well as the chairperson of Circular Business Association. I'm very happy to be joined with a new friend of mine, Jia Jean Fong, which I like to call him JJ. He is the founder of Generation Capital Consultancy, who specializes in helping companies protect their cash flow with better understanding on finance, refinancing, and funding options. Now, his work is important because cash flow is like the blood circulation of a company that can make closure or continued operations quite different, right? And you can
Yeah.
also be the difference between a healthily growing company and also a company that is struggling to meet ends meet. So I'm very happy to have JJ with us because I believe that the sustainability community, there's a lot of us who probably entered the business realm wanting to deliver impact. But then cash flow, this issue is a bit sort of an afterthought. But in any case, it's very important for our impact to sustain itself and grow. So JJ has actually been helping companies in this specialized way for the past 4 years and build his experience working with the likes of American Express and the loans and mortgages industry. He has a background in economics and finance and a master's degree in international business. So welcome, JJ, to our podcast.
Hey, thank you, Lijin, for the opportunity to share about how businesses can manage its finance. Thank you for giving me the
Yeah,
opportunities.
I'm actually really excited to have this conversation with you, JJ, because traditionally, I think most people, when they talk about sustainability, the narrative that's been drilled in our brains for like the past 50 years is that this is a noble cause. It's like our responsibility, the fact you have clean water, clean air, or you treat people fairly is a given. So you shouldn't even talk about profits to begin with when you're doing sustainability. What more talk about, making sure that the business will survive, which is kind of counterintuitive, I think, to what business actually means, because if you don't actually have enough profits in the business, any business, regardless of whether it is in the sustainability realm or not, it would mean closure, cease operations, and therefore whatever impact that you had represented actually, it disappears with the people that you are giving a good living or meaningful, purposeful work actually disappears. So yeah, that's really my interest of having this conversation with you.
Yeah, you're right. When we talk about sustainability, it's all doing back to the community, to the society, to the environment, to the people. But just like you say, first thing first, a business is still a business. You have to keep yourself and your business afloat in order to achieve the agenda of do good to the society, do good to the world, to the community. So yeah, I think business can say that do good for society and not think about the profit, but ultimately we have to take care of ourselves to continue to achieve the agenda that can help more and more people. Because if you stop here, which is the closure of the business, then there will be lesser people that you can help, or the less you can contribute to the environment, to the society.
And we have seen quite a few different examples of that happening. I mean, just look at the local scenes. It's quite often you would see like something like a mom and pop shop opening up, trying to be more sustainable in their product offerings and things like that. And then after struggling through maybe 2 years or so, they close shop again. And I think what really saddens me as a peer in the sustainability realm is that when these entrepreneurs sort of decide that this is done, they tend to leave the entire sustainability scene because they're so burnt out, right? They're so fed up with how hard it is. And to be fair, a lot of businesses with a sustainability theme are already fighting a linear economy, unsustainable system, right? Where costs undercut and all of that is already happening. So it makes business already hard to begin with. But then when we don't actually have the foundations of understanding cash flow and understanding the finances, I think it becomes extra hard for impact-driven entrepreneurs to actually succeed in their business. So maybe JJ, you can enlighten us a little bit, like what is actually the pain that you're solving? How do you work with people to help their business get through?
Um, okay, yeah. Since you mentioned entrepreneur, we just work with some venture capitalists or angel investor that we want to help up the entrepreneur. But always the first question or the first two questions they will ask is how can you make the book break even, or how can you sustain yourself with adequate of cash flow? So by this time, people would think, okay, from their knowledge, they know that what have been taught is there's bank facility called overdraft facilities, there's facility called working capital facilities, which is term loan and OD. Then they will start taking up everything that they could from the bank. As long as the bank offer, they will just take. But often they have ignore or overlook one question. It's the cost of financing. It's the same that
Mm,
if you ask for investment from the angel investor, for the venture capitalist, they will say, okay, what offering are you offering me? What is the interest, or what is the return of investment do you offer? All of these are considered as cost of financing because you're the business, or the business owner is taking cash from either the bank or the investors. So I think for a more beginning phase, they would just say, I wanted the fund. So I would overpromise something that they forgot to put in the calculations, and just to attract the investor, just to attract the bank to just release the fund to them so that they can start doing business, doing the operations and keep things going. But this is a very not good habit. It's a bad habit actually,
mm,
because there's in financial term we look at three length of time: a short term, a medium term, and a long term. So client that come to me often having one issue is that they mismatch their objective with the financing tool. For
mm,
example, some operation that is in the medium or long term, businesses are using a short term oriented financing to do the financing. Let's say because overdraft facility is just like a credit card for companies. If you use it, you have to. It's the best for you to just repay the amount in the end of the month, or at best the 2 months later, without
mm,
incurring much cost. But often what we see is businesses just forget about this. They will just take the OD and use it as a years of period of financing tool, which the interest is stacking up
mm,
and the cost of financing is going up. Whatever they earn is eat up by the cost of financings, which is totally unnecessary because this can be avoided by using other better financing tools to do it.
mm,
So
mm,
this is the main pain that I'm solving, to educate and also to acquire for our client the right tool for the right period of time for your objective. If you have a short term objective, we will do it and we will finance it with a short term financing tool. If you have a medium to long term, then will of course we will advise client or help client to acquire something that is prolong the tenure but less costing in the short term, so that they
mm,
can sustain themselves. They can have at least have a positive cash flow without having overburden. So when things go sideways, at least they still have a buffer for them to do something to
mm.
amend the the situations.
Yeah, this is so important because I mean, even just reflecting on that at the personal level, right? I mean,
Yeah.
I'm sure that what we have somebody that we know of in our circle of friends or family that either they completely avoid credit and they just pay everything like
Yeah.
upfront
Which is also
cash,
not good.
which is also not good. It's
Yeah.
and it also limits actually the ability for you to grow anything, right?
Yeah.
Because
Yeah. Yeah.
the capital that you have is very restricted. So or you have somebody who would use the credit card, but the moment they swipe the credit card, they immediately pay. So actually there's
Not
no
much of a
actually
difference from
benefit
using cash. Yeah. Yeah. Yeah.
from
Yes. Yes.
credit.
You're right. You're right.
Yeah. And then we have on the other sort of range at the other extreme, whereby, like you said, people they would swipe the card, but then keep taking the
Just pay the
overdraft and
minimum
pay the minimum.
payment. Yeah.
Yeah. And then suddenly, without realizing it, it's just suddenly blown into this big amount. And then your monthly sort of cash flow doesn't work anymore. But for
Yeah.
people who don't really understand what cash flow actually means, right, JJ, do you mind like just giving us a brief or most simple explanation of what cash flow would mean for a business?
Cash flow is something like your arsenal that you want to do something, you have to have cash flow. If you want to tender for a projects, you maybe if you are in the manufacturing, you need cash flow to buy your materials, your ingredients. Cash flow is the backbone of the company. Just like you say, um, doing at the extreme spectrum of both ways is also not good. If you're paying everything in cash, full in cash, means that you have left nothing in your arsenal. So if there's some incident happen, then you have no more buffer in your arsenal that you have to do something which is cost you more than what you would have to do. So people who using full credit without repaying it is also not good because the cost of financing will get higher and higher. So what you say is also true. If you use a credit and you pay it up immediately, you also defeat the purpose of utilizing or leveraging on the financing tools. So we usually advise client the first step they would do is to map out what is the thing that you want to do and the timeline this thing will happen. So a 1 month operations, maybe you have to see how long can you get the cash flow back, maybe from your client, from your vendors, from your suppliers, and then we go and map what sort of financing tool that can cater for that period of time to give you some leeway so you can do something else without worrying about the finances. But
Mm.
ultimately, the inflow of the cash should fit up with the timeline of the repayment of your financing to the bank, to the investors.
Yeah, so it sounds like it's not only about, the numbers coming in and the numbers going out, but there's this timing it
The
correctly.
timing is, yeah,
That's where the
because in
cash flow.
finances, yeah, in finances the cost is going perpetually or linearly with time. Time is just like money. The interest is chargeable by time, by monthly, by quarterly, by semi annually, or even annual and no interest. So businesses have to take everything have into account, whether
Mm,
it's a monthly commitment or a quarter commitment, semi-annual commitment, or annual commitment. It's all
mm.
affecting your account books.
Yeah, yeah. So if we were to use an example to talk about it, imagine if, let's say, I had a business and then I have signed like this big deal with a client, right? And then the client is going to pay me this amount of money at the end of the first month. But let's say by the end of the first month, something happened, it delayed a few days. But my suppliers to all the raw materials I needed to create the product to give the client is already asking me to pay them the money, then I would be caught in a fix if I didn't have cash flow to then pay off the suppliers while waiting for the money to come in. Or I should have adjusted something so that the timing fits better, that I get my payment, then I pay the supplier. In the most, I guess, layperson term, that would sort of be the situation that businesses can find themselves being caught in.
Yep. Yep. For your situation, there's something called invoice financing, or we call factoring for the bank side. But nowadays, lately, banks and institutions found that it's getting higher risk of doing the invoice financing or factoring financing tools. So they have started to stop providing these kind of facilities. So people is also caught up in the situation, like you say, my credit term doesn't catch up with the inwards flow of the cash flow.
Mm,
Okay, so there's one real life example. There's one vegetarian restaurant owner.
mm.
He has a 2 million annual turnover, but he says he caught up in a very bad situation because for the monthly inward cash flow revenue he generated is around 48,000, but the cost of financing is already it's up 40,000
Oh,
because
wow.
unmanaged overdraft facilities and working capital's term loan. So every month he's just getting 8,000 as a net profit for himself as a business owner. It is quite um bad thing because to do to do a 2 million turnover vegetarian restaurant is really not easy. It's a hassle of work. But if you're just getting 8,000 of paid, it might can't sustain your own life. Because initially
Mm,
he set up this vegetarian restaurant with the agenda to help more vegetarian, more vegan, to have more options. It's a very
mm,
good agenda, but he's getting himself into a massive trouble because the wrong use of financing tool, which is the keep using the overdraft, because he thought the overdraft facility is the only thing that he can acquire.
mm,
So this is one thing as well.
mm,
Um, Another thing is another case study is I come across a client that doing um the fish supplying. So he supply the fish to the market, and he's quite a big supplier. It's an annual turnover of 3.7 millions. But see, there's always some situation that's specific to industry. So for his industry, the situation he incurred is always the blackmail of the pirate on the sea,
mm,
because he's going out the sea to get the fishes in the Indonesia sea area. So
mm,
there's a lot of pirate that just conquer their boat and
mm.
blackmail them. Every time is around 300 to 400,000. But due to
Wow.
the time that the old generation is not too financial literacy,
Mm.
so what they can think of is go to the bank and get a loan to pay the pirates. But
Oh.
there will be a limit, a bank that can borrow you.
Mm.
There will be a limit in working capital. There also be a limit in overdraft. So they just use up every quota of the working capitals and also the overdraft, to the point of extent that the OD has remained at 1.5 million overdraft facilities for years. So
Wow.
every year they are just paying for the interest of the overdraft facility without reducing the principal. So they work very hard to get the business stay afloat, to get sales, to get revenue for the business. But the overdraft facility just doesn't reduce. The amount just staying there because the interest itself is already eating up a major part of their expenses. Put
Mm,
aside, they have a fixed expenses, fixed costs for the day-to-day operations.
mm.
Yeah, these the two, I think, very impactful case study for a misuse of overdraft facilities that I can think of.
Mm, mm. And it's sort of like sad to hear because it doesn't only, these people have actually put in the effort to build the business, right? To actually make it work.
Yeah,
And
it's
then
very,
to
very sad.
yeah, to see that effort just being eaten up gradually because of a misuse or misunderstanding of how to use these financial instruments. It I mean, for some people, maybe they can stand back up again, but I'm sure there are many others that like one time bitten, twice shy,
It
may
is
not
quite
try
suffering
again.
because like the vegetarian restaurant owner, he wanted to do good to the vegan society,
Yeah,
but he's gotten himself into a very severe situation where he can't sleep due to the stress of financial difficulties. But
yeah.
meanwhile, he doesn't want to give up his dream to make the vegan society better. So it's very sad that seeing a person who insists of doing good to the society but bad to himself.
I'm glad you
Mm.
actually raised up that topic because this is something that I also feel very strongly about, that a lot of people in the sustainability realm actually are not sustaining themselves very
Yeah,
well.
yeah, it's very
Um,
sad to see that.
Yeah, and therefore that's why we need talents like yourselves actually in various aspects of business functions to really make the game sort of more level in the playing field. Like say, how is it we can support people who have that calling to really do much better for society and for environment to actually succeed and deliver their impact in much sort of bigger ways. So now I'm curious actually, when a client actually does come to you with those sort of situations, I guess what can be done? I'm sure you have to do some sort of diagnostics first to figure
Yeah.
out what happened, and then something happens. Is how would walk me through that journey? How would you work with someone?
Okay, firstly, we will always get the books, the financial books, the profit and loss statement, your balance sheet to determine actually what is wrong with your decision for the past years or past few years. So this
Okay.
is the first thing that we see. What is the are you getting a lot of long term expenses by financing it with a short term financing tools, or is it uh you have overdue financing tools that you can't manage, or maybe there's a supply chain that you are you are owing. So that's the first thing, because it can branch out to a thousand of scenarios where everyone have their own issues and own situations.
Mm, mm. Right. So first step would be to figure out what actually got
What's
them
wrong?
in the
Yeah.
situation they are today.
Yes. So the second step would be discussing with the business owner what is it your future planning in the next 3 years. What is the future project that you have? What is the expenses that you are expecting in the coming 6 months? And how are you generating your revenue? Because it is, maybe it might can be a very sensitive topic to touch down, to ask about what is your future projects. They might feel offended, like, "Oh, why are you questioning my business?" But there's one thing that would love to educate our client, is that we are not trying to question your business or the way that you do. We don't really question the reason you started this business. But if you come to us, we are just have one agenda in our mind, is to keep your business at least stay afloat. Then only that you can strive for your dreams, for your objective, for your agenda. So the second thing is by mapping the expenses and the commitment for the timeline that they will incur, then we'll see what can be get rid of and what can be replaced in terms of financing tools.
Which is so important. Yeah,
Yeah.
because very often, like when, especially if you're not familiar with the business game, right? It sometimes seems like you have to take on certain tools, or even certain suppliers, or even certain clients,
Yeah,
even
yeah,
though
yeah.
you know you may not be able to
You
match
have to make a
well.
choice, yeah. Make
Yeah.
a decisions.
Mm, mm,
And I think the financial knowledge, because I coming from a financial background, I think this is some common knowledge. But there was once I talked to a CEO of a company doing market research.
mm,
After I sharing those financing knowledge, a brief financing knowledge with him, he was like, "Why didn't someone teach us about all this financing financing knowledge? No one teaches how to calculate for the interest, calculate the cost of financings." Yeah. So surprisingly, we found that actually not all business owner is aware of the cost of financing, when it is a fundamental for business, which we think that it should be the first chapter that you look into before you start a business. But
mm,
for many business outside, actually no one even realized there's something called cost of financing.
mm,
They
mm,
would just say, okay, monthly payment is how much, whether I can pay. Then if my business can fork out with the amount, then it would be fine. But actually, there's much more than that, because interest is compounded. It depends on what sort of financing tools that you acquire, and it goes by time. The longer the tenure and the longer you didn't take a look into it, it might be surprise you in the future events.
mm, mm. And then when other external events happen out of your control, out of the business control, then it leaves you more vulnerable because you have less options, less resources to actually deal with those external events. For example, if let's say a flood actually caused your whole factory to close down for a whole week or so, and all you're delayed with all the orders and everything already, to even get the factory back on, there would be a
Yeah,
cost that you need to expose, but then you find you don't actually have that resources
yeah.
in the back.
And it's important to maintain a healthy cash flow, because um when you need bank the most, that's the time where the bank turn themselves to the client. So I have encountered this client that set up a manufacturing factories
Mm,
in Selangor. So he's a good business. It's a good manufacturing business of glove, because during COVID, glove is something very popular, and everyone is buying
yeah.
for the pharmaceutical side. So banks are offering a lot of cash flow, a lot of facilities to him. There's one point of time where the COVID has come to the end,
Mm,
and the business of face mask and glove is getting slower in the market.
right.
The bank saw the trend that it might be something not going to be profitable in the future trends. So they call off a major part of the facilities.
Oh,
Yeah, because people think that in the overdraft facility agreement, there's always a line say the bank has the discrete decision to call off fully or partially of the facility given, because it's based on annual review. So every year the bank has to have the right to review and redecide what is the amount of facility will be given. So if they think that this industry or this line of business is not going to be profitable, they will want to reduce their risk of exposure. They will just try to make a decision to reduce their risk, putting aside
mm,
whether it's good or bad for the business. This is not really their concern. So this
yeah.
is what shocked most of the people when they need
Mm.
the facility the most. That's when the bank recall all the facilities.
We mean facilities is the amount of
Yeah,
either
amount of
debt or
overdraft. Yeah,
overdraft, yeah, that they
yeah, they
can
will.
take.
Yeah, they will force the client to just fill up the hole and close the account.
Oh, I
Yeah,
see.
yeah,
Right. So then they have to repay everything that
yeah.
they
They
owed
have
as
to
well.
find a way to repay the amount and then close the account within a period of time.
I see. Wow. Wow. Well, I mean, to from the bank's perspective, this is a very necessary part because
Yes,
they
yes,
are holding a lot of people's funds as well. If they
yes,
mismanage and
correct.
banks collapse, a lot of people also will suffer. All our savings in there.
Yes, yeah. If
Yeah.
you think it from that way, it's perfectly common and a
Mm.
wise thing to do from the bank perspective.
Yeah, yeah.
Mm.
But it's when that sort of timing and
Yeah,
who is
yeah,
actually taking the suffering at that point in time, then it becomes dangerous if you weren't anticipating that something like this could happen.
yeah. So that's why we always keep a buffer in the cash flow. It's not to empty your bank account, your company bank account, because you can't foresee everything in the maybe even in the next 6 months. You can't foresee everything perfectly. There would be could be something that is of anticipations.
Yeah, yeah. So it's not only like, small mom or pop shops or like, beginning social entrepreneurs or like small entrepreneurs. There's actually like, even medium to large businesses as well that actually, struggle with this cash flow issue. And I just thought of an example just now as we were speaking there that, it was actually a circular business idea. It was in China and you know how people rent the wedding gowns, it's quite popular
Yeah, 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 yeah,
in
yeah, yeah.
Malaysia, no?
Yeah. Yes,
Yeah.
yes, yes.
Yeah, but in China, they actually said, okay, why don't we try this closet in the cloud idea, whereby we went for corporate clothing. So, how, like, these executives want to look good. They don't have time to even wash their clothes or press their clothes and all that, and even go shopping. And China's space for like these big cities like Beijing, right, is very
Very limited.
expensive. So they
Yeah.
said, why don't we don't get rid of the whole closet and then we will literally rent to people these corporate clothing, high value corporate clothing, freshly pressed each time. Every week you've got new design so that you look prim, proper,
Wow.
at affordable pricing, right?
Yeah.
And there was like they actually beat a lot of new entrants. This company actually beat a lot of new entrants, and they even got 150 million registered users, right? And
Wow.
and yet after 6 years of operation, they still ceased their operations. They had to close down. And part of it was because there was a lot of costs in the stock management, in the warehousing, in the logistics, and the distribution and delivery
The whole chain of
of these
supply.
things. Yeah. And
Yeah.
when company cleaning and maintenance sort of costs increased because the different companies were trying to beat each other to like say, oh, we clean more
Try to
sanitize,
compete.
more, yeah.
Yeah. Try to
So they
compete on the price. Yeah.
in the end, these things sort of just went out of the rental app platform's initial expectation of the costs involved. And then of course there's this ecosystem that everyone's trying to compete each other. They didn't actually build up the pie together.
Yeah.
If they had there's
True,
some
true.
sort of standards or something that they jointly agreed on, maybe it would be a bit slightly different story. And therefore we saw the sort of closures of these big companies as well, that were quite successful for the years that they were, when costs came up and there was just not enough cash flow to keep it going.
Um, yeah, because competition is something that we can't really foresee when in at the beginning of the phase. So I think they didn't foresee that the competition will get so severe that they have to start reducing on the price, but the cost is going up because the supply chain see that more and more entrepreneurs trying to get a piece of cake of these industries of this business, and then the cost will just go up.
Mm, mm. So this is a really interesting journey, that you and a way that you're working with businesses very specifically. I mean, we've met various business consultants over time, but I would say it's quite interesting that you've specialized in getting them through the cash flow part of it, and people actually come to you when they're in those dire situations, try and figure out what financing options are available to stop them from going into bankruptcy or closing down and things like that. What actually started you on this journey in particular?
Um, started from my academic. I was having my degree in finance and economic, and also my master degree in finance. So I think this is something that it is in me since the beginning of my youth. So there's a journey that when I in the corporate, when I come to American Express, I was in the credit department where my responsibility is to call up the business and chase for the fund that they owe to American Express.
Mm,
And that period of time is during the COVID, where business can't operate properly,
yeah.
especially for those have a physical shops, and they are also figuring out how they can sustain themselves.
Mm,
And then there's many incidents that I have called up to the business. Some of them even crying, even shouting, yelling. And the main point is always, it's a hard time for us. Why are you calling up to get money from us?
mm,
That shocked me quite a bit because it's very saddening that in that department every day we are chasing over the business owner from across the world. The market I serving was New Zealand, Australia, Hong Kong, Singapore.
mm,
So all of them having the same situation where the business is not doing good, but they still have to pay the obligation that they have used up, which is the credit line.
mm,
So this makes me think that it is something that people needs to know, that they should have prearrange or strategize at the beginning of phase to put them out of this situation where you have some buffer to face something like the COVID. Maybe the COVID
mm,
is not some norms that will happen often, but we can't tell, we can't promise COVID or something similar will not come in the coming years or coming futures.
mm,
So I see the opportunity to educate or to share with the client about how important is to look into your finances before the real issue caught up. And also because I came from a family background with a construction industries. So in Malaysia, construction industry is always facing the same issues about cash flow, because we have to get building materials, then we have to do the works, but the claim from the developers or from the main contractor is always late because the chain is very long. So developer have their own finances obstacles so that they can't meet the payment to the main contractors. So the main contractors have their own financial obstacle also, which they delay for the subcontractors. So the whole line of constructions is always facing the same thing, the cash flow. So
Mm,
my family also facing the same thing where we also once stuck in the overdraft facilities issues where it get us quite a hard time. So I think this also motivate me to go out and do something about these directions. I hope that I can help more business to stay afloat, and more people or more business owners should have the awareness of how to manage the cash flow to avoid some unfortunate incidents or events for the family.
mm, mm. So if you had the magic wand, I think what would you want most to happen in the coming few years in relation to, this pain point that you're solving and what you're doing?
If I have the magic, I would say everyone who want to start a business should have a basic knowledge of managing the finances and managing the cost of finances, because it's very easy to start a business and it's easier to get kicked out from the business actually, because to get into the business you need passions and sufficient of money, but getting out of the business could be faster than you can imagine, or maybe you can't imagine, because like the example you provided, there are 450 million users supposedly that they have a bright future and can be sustained for years, for decades, because the user group are so large. But
Mm,
ultimately there must be something that can't foreseen during the journey of the business. So people should know how to manage and control, especially of the finances, because as long as you have cash flow in your bank account or your company bank account, there's a least at least you can stay afloat. Then you can have the chance opportunity to come back, to stand back
mm,
up. That's the most
mm.
important thing. So I would hope that everyone will have adequate level of literacy on financials.
And do you currently provide that type of very basic knowledge of
Yeah, yeah,
finances
yeah,
that
yeah,
every
yeah.
business owner
Sometimes,
should know?
yeah, yeah. Sometimes we do sharing in groups, in small group, medium group. Also sharing one-to-one consultation, advisories. That's what we're trying to do lah. Maybe we have some agenda objective is, we know like the sustainable business profit might not be a thing, but we should at least keep ourselves afloat. So we also keep sharing, and talk to more people about the basic or fundamental of financials management.
Mm. Yeah, well, at Circular Business Association, we are making profit a thing because we truly believe that if so-called sustainability driven businesses are not profitable, then they actually can't sustain themselves nor the livelihoods of the people that they employ,
Yeah, yeah,
and
correct.
therefore the sort of ability to impact is very limited by the existing sort of resources that you have. Whereas if we were to tap into, the profit realm, into the various ways to leverage on other resources, then the possibility to make these changes at scale and quickly is going to be a much higher chance. And given, the climate situation is quite dire,
Yeah.
we need all hands on deck, to pool as much resources as we can in this direction. And therefore, profits is actually something that is very much needed, and we have to talk about it because it's people's
Yeah,
livelihoods.
we have to
um
be realistic and face it.
yeah, once we can, I mean, my group truly believes, I think, that once we can hit people on the livelihood aspect, right, sustainability is a norm. But until you can hit the livelihood aspect, sustainability is just on paper. Is
Yeah,
nice to
yeah.
have. If you do when you are free or you're feeling very noble and want to do some volunteer work, that's not going to change the world. And therefore, we really have to hit quickly onto this livelihood issue, how to make sure that while we're doing good, we're actually not only sustaining our own livelihoods, but also helping other people who feel the same way about wanting to do meaningful work, also sustain their livelihoods as well through our employment. So yeah, that's a really interesting point that you raised there. And really happy to hear like what you're doing in your work. I think there's, as you say, there's a lot of people out there who need this. Probably beyond just doing sharings and things like that. Probably there's something that you could offer. Even maybe we can explore this with our community, see if there's something that we could do together. Because I truly believe that having that basic financial knowledge is so key, so key. Most people I know who entered the realm, either they are engineers or they are product designers or they are scientists or they are they just felt very strongly about it, completely unrelated. But the business foundation is actually what's going to make it possible or not. And I'm really happy to see that talents like yourself are working in this space. So how can others support or collaborate with you if they wanted to work closer with you? Where to find you?
There's always a internationally use of medium of communication, which is WhatsApp. We also quite rely heavily on WhatsApp to connect to our client and also our international client like Singapore, Taiwan, and those. So the first thing is the business owner should stand up and really take a look into their situations. This is the first thing because uh, we can walk up to 99 steps to try to reach out and help more and more people. But the last step would be that person would also want to stand up and reach out to us. So yeah, the first thing is always start to be realistic. Profit is still a thing to the business that if you can stay alive only then you can change the world.
Mm,
Yeah, so we hope that we can always have a more discussion and talk with your members and how we can help to mitigate the risk of financial obstacles, financial incidents that would surprise them.
yeah. Yeah, I think like as you were speaking, it reminded me that a lot of people typically either think of bank or they will go for some sort of angel investor or VC to get funding in order to do, projects in our realm. And funding is always a big question in their mind.
Yeah.
And but then like there's many other ways, if I understand you correctly.
Yeah, yeah. Um, First thing that the business owner can look into is also to do a refinancing apart from going to bank overdraft facilities or even term loan, because refinancing with the property, let it be a commercial property or the business owner own residential property, it's always a lowest cost of financing because it's a secured loan in the bank perspective and it's a longer tenure. So your monthly commitment and the interest chargeable is not too high and not so high compared to other options, alternative. So
Mm,
we always the first thing is before you go to the bank for asking for overdraft facilities, how much is the fund that you need? If the fund that you need can be mitigate with refinancing your properties, that would be a we would say it would be a best choice to go with in the first place because then you can have more leeways to do more things before the commitment hits. So this is the
mm,
first thing, refinancing the property. And we also have our own legal firm that help client to handle all the documentations during the process for the bank agreement, bank loan agreement, or even investor agreements. Everything we have get it covered. So
mm,
the next thing that we're also trying to do is to acquire fund from all over the world, especially those countries that have lower interest rate. Like the projects that we're working now is to work with the Japanese corporations, where because the Japanese economy has a very low interest rate, because the Japanese government would want to stimulate their economy.
Mm,
So the interest in Japan is quite low. So Japanese corporation is trying to inject the fund into Asian markets like Malaysia and Singapore's, because ultimately uh their expectation is always lower than the local expectation of the return of investment of the fund. So this is the alternative option that we will also love to see in coming years, because we are
mm.
working it this year. Hopefully, everything can settle and happen next year.
Okay. So, is there anyone that you would be looking for? Your ideal sort of clients, who are you looking to work with in the coming
Yeah,
years? Mm,
of course, directly, we would love to work with your members directly, those business owner, because they are the core person who make the call and make a
mm,
decision whether to make a change to the situations. So
mm,
indirectly, we also work with a lot of accountants, auditors, and company secretaries, because sometimes the business owner themselves might not aware of the situation or how severe of the situation, but it's
mm,
always the accountant, auditors, or company secretaries who realize the issues. But sometimes, because accountant is still accountant, auditor is still auditor, they have no extra time to source for solution for the business owner. So that's
mm.
where we come in and collaborate with the accountants, the auditors, to help out the business owner have a more healthier cash flow management.
Mm, mm. Okay, right. Yeah, thanks very much, JJ, for this really interesting conversation. And I really like that point that you made there. Like at the end of the day, the solutions can be found, but the person needs to be willing to step out and
Yeah, yeah. At
face
least
it.
one step. Yeah, at least
Yeah,
start to face
yeah.
it.
Because it reminds me of something that somebody also said. Like when you start lining up all the people that can help you, it's actually quite scary in some sense for the person, because you stand in front of the mirror and the only person that is probably standing in the way is
It's
yourself.
yourself. Yeah. Yeah, yeah, yeah.
And as an ecosystem builder at Circular Business Association, we really want to play that role to, of course, line up all the people that could help various businesses in the sustainability and circular space, to help them succeed. And therefore, we work not only with people in recovery and repurposing of materials, but even the manufacturers, talents across different business functions, distributors, logistics, delivery, investors, regulators, product designers, technology providers, etc. But like JJ rightly put there, at the end of the day, is that are you willing to face yourself, in recognizing the situation that you're in and where you would like your business to go to, and that really would help sort of line up these suite of people that can really help you achieve your calling and your dreams. So thank you very much, JJ, for joining
Thank
us
you
on
so
this
much for
episode.
giving me the opportunity to share. Thank you so much for the
And
chance.
any last sort of thing that you would like to say to our audience?
Um, I think like you said, we always like our client to get away with one line of thing is there is always solution, but just don't try to sweep the issues under the carpet and think that it is not going to happen, because ultimately it will. It's just a matter of time. So the earlier that people start recognizing the issues and start taking action on it is always better.
Very wise words indeed. Thank you very much, JJ,
Thank you
from
so
Generation
much.
Capital. Yep, it was a pleasure to have you. And for all our listeners out there, I hope you found this episode useful. We'll be putting the sort of contact detail for connecting with JJ on the description of the episode. So make sure you look into that. And we'll see you next time on another episode of Circular Insights. See you. Goodbye.